How's it going, guys? It's Lucero Boy, and today we're going to talk about what you should do when you get a raise. What often happens is people fall into lifestyle creep after getting a raise. So what happens is you're making about this much money and your expenses are around here. You get a raise, but then you increase your expenses by buying a new car or buying a new house, this and that, and suddenly the gap between your expenses and your income is pretty much the same as if it were down here. So what ends up happening is when you're making more money, you're actually taking steps away from your financial goals, putting you further behind than when you started. The only way to make sure that you're not straying away from your financial goals is to have a budget plan and to make sure that you're putting in more into your investments and savings as your income increases. It's actually been a while since my last video, and a couple of things have changed with my finances. First, I'll start off with my 2020 third quarter budget update, and then I'm going to tell you guys what I'm doing with the raise I just recently got. So to recap, my goals for 2020 are to 1. Invest $25,000 by 2021, 2. Reach a net worth of $70,000, and 3. To challenge myself to reach $100,000 by 2021. I started 2020 with a net worth about $37,000, and my starting salary for 2020 was $45,000. So far, I've invested $19,000 in my portfolio, and my net worth is about $81,000. So you're probably asking, how am I going about reaching these goals? And the plan is pretty simple. It's spend as little as possible and invest as much as possible. Whenever I get my paycheck, I divide it up into my investments, my bills, and then lastly, my discretion that I can spend on whatever I feel like spending on. Everyone's financial situation is different. For example, I have no debt, I have no loans, and I live with my family. Thus, it is my responsibility to spend my money as wisely as possible to propel myself into the future. So let's do a brief overview of my budget for 2020. About 14% in my bills, 76% in my investments, and 8.72% in my discretion. So broken down weekly, that's about $90 in bills, $480.77 per week in investments, and for discretionary funds, $54.61. For a month, that's only $236 of just money I can spend. To many people, this might not seem like a lot of money that they would want to use, but because I've laid out my plan, I want to follow this budget. My general overall goal is to become financially independent as soon as possible. Becoming financially independent to me means not having to worry about money in the long term. The main reason why I'm focused on saving as much money as possible and investing while, keeping my cost of living low. Perhaps in the future, I want to get into a career that actually doesn't pay as much as the career I'm in now. Since I built a passive income of wealth, it's okay for me to take that pay cut. I want to give myself the option to pursue that path if I wanted to. And if I didn't want to do that, maybe I would find another passion in my life in the future that I want to pursue. And if I do that, I do have the wealth to help support that passion. So these might not be the same financial goals that you might have in mind, but hopefully me explaining my process of obtaining my goals help you figure out what you need to do to reach your own goals. So I actually added a new sheet to my budget, which actually gives me a monthly breakdown of everything that I've been spending on lately. So you can see how much I've been spending in January, February, March, so on and so forth. You can see how I spent almost no money in April and May because of lockdowns. And then after lockdowns were lifted, I started to spend more money going out and actually going on a vacation. Being able to track how much money I'm spending makes sure that I'm staying on the path to my goals and I'm not setting myself backwards. So for example, even though I was spending so much money in these months, I was actually over budget for the month. My target every month is about $236 in discretion, but you can see I went way over it in July, for example, and September. However, I knew I could spend that money because I spent so little money the months before. So what does this mean for me going into the next 2 months of 2020? It means that I need to cut back on going out to restaurants, buying food for lunch, and just buying things in general because I need to save money for the holidays coming up. Being frugal and strategic with where you put your money isn't about not being able to do anything. It's about allocating money to what is most important to you at that time. So for me, I'm going to cut back on the extra spending that I'm doing so that I can buy gifts for my family and friends. Let's look at where I am at financially for 2020. So far, I have about $11,000 saved up, which is about 3.6 months of my salary, or about 4.86 months of expenses, which I've estimated. My expenses estimate is if I were to live by myself and I rented a place on my own in my area. Ideally, you want to have a strong foundation of savings. This strong foundation of savings makes it possible for you to invest and save as much money as possible. What happens when you invest your money is that it gets put away in a place where you shouldn't take it out. When you put into stocks or bonds or anything like that, they don't appreciate in value until 5, 10, or even more years. If you take your money out prematurely, it's most likely not going to have increased in value. If anything, it would have lost value. That is why it's important to have an emergency fund and a specific savings allocated to just spend on day-to-day things. Whenever you invest money, don't touch that money after you've invested it. So over here you can just see like a specific breakdown over my discretionary spending and my bill spending. This includes some things from October, which I haven't added into my other sheet. So you can see that I am a touch above my average for each month in my discretion and a touch below for my bills. Overall, I'm on par on where I want to be. I already have an $80,000 net worth. I'm going to hit the $25,000 investment by the end of the year because I'm also adding more money from my raise. Hitting the $100,000 will be a little bit difficult. Even with a good market, it will be relatively difficult to hit that without supplementing my income with selling some of my assets that I have laying around. Going into the end of the year, we should all expect the market to go down because historically the market usually goes down during an election year. So I can't really rely on my market value to help me hit that 100,000, but you never know, it could help. Like I was saying earlier, I recently got promoted and I got a raise. So my original salary was $47,000, now it's $54,000. And what am I doing to make sure that lifestyle creep doesn't push me further away from my goals? There's several ways to approach your salary after you get a raise. One way would be just to increase your discretionary savings, buy the new house, buy the new car, buy some nice things, anything that pretty much increases your day-to-day cost of living. The issue with this is every time you increase your cost of living, you increase how long it's going to take you and how much money you need to save to support yourself in retirement. Every time you added $1,000 to your cost of living, you need 25 times that, or $25,000 invested in your retirement in order to support that. So if you wanted to have a $40,000 a year salary while you're retired, you would need $1 million invested. So that's not the best way to distribute your salary after a raise. Another way to do it is to make sure you maintain your budget allocation for each aspect of your life, even after you get the raise. So if you're spending about 30% on your discretionary, 50% on bills, and 20% on savings, after you get your raise, make sure you maintain those percentages. This way you still get to enjoy the luxury of getting a raise, but at the same time, you're also increasing how much money you're saving. Because you're still following your percentage goals, it means whatever financial goal that you set in the beginning, you'll still be able to reach it. It won't help you get to your goals any faster, but it'll make sure that you stay on your path and maintain your direction towards that goal. Another way to distribute your raise is to do what I'm doing, which is basically keep all your costs low and only increase your savings and investments. This would be like the extreme opposite of option 1. What you're doing is maintaining your cost of living while increasing your income. The bigger gap between your expenses and your income is how fast you're going to be able to reach your financial goal. Let's visualize this with a retirement calculator. Let's use my specific example. I am 27 years old. My annual income before was $47,000. And my annual expenses, I was estimating about $37,000, and my current net worth is $80,000. So, a brief description on how this financial retirement calculator works. It calculates how much money you need in retirement and what portfolio balance you would need to be able to withdraw from it at 4% indefinitely. So this is actually a very conservative calculator. In the end, your portfolio will actually increase in value while you're withdrawing from it, meaning you'll never run out of money. Some people, their financial plan is to reach their retirement number, and before they pass on, they're going to use all of it. This plan is very conservative, so you'll reach your financial number and you'll maintain it, and it'll actually increase. and then you could actually pass on this portfolio to your family. Pretty much this is what it's saying is my income is $47,000 a year, my expenses is $37,000, meaning I am saving $10,000 and putting it towards my savings and investments. According to this calculator, if I follow these investments and money allocation, I'll be able to retire in 31 years by age 58. Meaning when I'm 58, I can stop working and I can withdraw from my portfolio at a rate of 4% and never run out of money and live on a salary of about $37,000 a year. Now, what happens if I maintain this $37,000 cost of living, but I get a raise, for instance? And that's going to be $54,000. So now I can retire by age 51 in 24 years. I basically saved myself or gained 7 years. So you can see how the power of maintaining a low cost of living while increasing your investments and savings can lead to an early retirement or early financial freedom. So this applies to any kind of income or any kind of cost of living you're looking for. So let's say hypothetically you were making $100,000, or I was making $100,000, but I was spending $80,000 worth of it. It'd still take me 36 years to retire because my cost of living is $80,000 and I want to maintain that. But if I were to be able to cut down to $50,000, I could retire in 15 years. Imagine that. You don't need to work anymore in 15 years. So what's crazy is that a lot of people live on less than $50,000. So let's say you have this fantastic job, you're making $100K a year. If you were to keep your expenses to only $50,000, you could retire in 15 years. Actually, what you could do is save that much money for 15 years, then take any job you want, maybe travel the world, or maybe do like nonprofit work, volunteer, do whatever your heart desires. But it doesn't matter because you have enough money to withdraw from your portfolio indefinitely and never run out of money. The amount of freedom that gives you is the kind of feeling that I want to get. It is my ultimate goal to have that peace of mind day to day, knowing because I'm following my budget, because I'm following my plan, I do not have to worry about my future. And that's the biggest reason why I'm following my budget. So right now, my biggest worry is spend $260 on myself a month, no more, and spend about $360 on bills every month. Of course, that's going to change when I live on my own, but for right now, that's all I gotta do to put myself in the best position possible in the future. Okay, so originally for my $47,000 a year salary, I was investing 76% of it, which would ultimately lead to $25,000 invested over here. And I also have 14% towards bills and 8% towards discretion. What has changed is that I've increased my investments to about 79%, so that I'm investing $29,000 per year. And then my bills are the same, it's $90. My weekly discretionary fund is exactly the same, $54. But my weekly investments have increased from $480 to $563. As you can see, I'm maintaining all of my costs, and the only thing I'm increasing is my investments and savings. So I want to emphasize that everyone's financial goals are different, and you've heard mine, and it's okay if yours are different. It's a minority of people that want to retire in 10 years, and even fewer that are willing to make the sacrifices in order to obtain it. My goals, as I've said, is to reach a position where I have the financial freedom to make whatever decision I want. Maybe be an occupation or follow a passion that, requires support of wealth. So I hope this video helps you plan for your goals and give you an idea of what kind of path you need to follow in order to reach your ideal future. Down below are referral links to M1 Finance and Webull. If you want to take control of your finances and start investing, use those referral links down there. They help me out and they help you out at the same time. If there's anyone out there you think might benefit from the information in this video, please share it with them. When I was younger, if I knew then what I knew right now, I'd be way ahead of where I am currently. And I'm hoping that this information helps them put them in the best possible position that they would want to be in their life right now. So thank you guys so much for stopping by, and I'll see you in the next one.